Hello, we made it.
We're back.
Here we are again.
We
Episode,
survived episode 7?
is it episode 7?
Yeah, episode
Yeah,
7.
we had a little
We
bit of a gap.
we survived crypto winter. I think we needed a break.
Yeah, that's my third crypto winter, technically speaking, but my first actual crypto winter event that wasn't anything
Yeah.
to do with a downturn in the cycle. In fact, if anything, we celebrated an upturn in the cycle
Yeah.
through an event we called, ironically, Crypto Winter.
Yeah.
Um,
It was I mean it was sold out. There were well over 100 people, packed house. And I think the key theme was we're at an inflection point,
mhm.
right?
Yeah,
Um, you know,
absolutely.
we had some, amazing sponsors, and well done to Trevor and Jazz and the team for organizing the event. Um, we had amazing sponsors led by SwiftX and Easy Crypto. Jason Titman kicked things off with an amazing keynote
Mhm.
where he talks about the inflection point we're in. Trevor, what were your highlights, mate?
Yeah, I mean there was a lot of interesting stuff. I think Jason's keynote was really magical. Like just to have that kind of global down to local kind of perspective. And I, you'd have to be if you've been in the space and you've been in the space for a while, like all of our listeners out there definitely have. Then you kind of feel this inflection point, right? Like we're institutional adoption. I was reading a stat just yesterday where the kind of ballpark figure for something to go mainstream is around about 20% adoption, and globally we're sitting at around about 15%. So we're right on that point where I think institutional money's flowing in. JP Morgan done a backflip, they're now all in.
Mm,
BlackRock all in. So all of these huge institutions pouring in. They don't make those massive moves if they think it's a scam, right? If they think that there's
yeah,
anything risky involved. So I think that validation is having its sort of flow-on effects. And Jason talked a little bit about, the other kind of interesting moment to me was that stat that he dropped. 95% of all Bitcoin is in market, so there's only 5% of supply still to be released.
mm,
Uh, and only 5% of people own Bitcoin. So there's an enormous kind of onboarding to happen with a limited supply. So that could be for whatever that's worth. An interesting bit
yeah.
of information.
Not
Couple of the other
financial
big ones.
advice. Yeah.
Yeah.
Well, what were the other big ones, mate?
A couple of the other big ones was the conversation where TradFi and DeFi are starting to come together.
Yeah.
Like, we sort of curated that as part of the agenda on a whim, like thinking, oh yeah, there'll be some interest in sort of this space, and it just blew up. Like it was way more important and exciting than I thought it was going to be. We've had an enormous number of people reach out to us. We've had a few TradFi in inverted commas, just regular financial companies joining Blockchain New Zealand recently, which is
Mm,
exciting. And so we're going to do another one of those on November 10th. So if you're not following Blockchain New Zealand, please do so, and you'll be able to stay on top of that. And if you're in the Auckland region, you'll be able to attend that event. But yeah, some significant, traditional finance type companies, KiwiSaver funds, those kinds of people interested in the digital asset space, which is exciting, I think.
yeah.
And then, just the other thing that I really enjoyed from it was nearly 40% of the people in the room, and yeah, there was about 120 of us in total. Roughly 40% were internationals, which is really big for New Zealand, right? We're a little country, we're
Mm,
a little market, and to have such strong interest from offshore companies coming as far as the broad
Singapore.
APAC region, Singapore,
Yeah.
Vietnam, coming into the region to sort of talk a little bit about the market, the wider market, and also explore and understand who's in the market here in New Zealand. And a few people have talked about some sort of deal flow type opportunities that have come out of the back of it, which is a huge part of it for me. So yeah, I think it was a pretty successful event. I don't know. What did you think?
Yeah, I thought it was a big success. I mean, some of the names, Tether, Binance, um, Ripple. I mean, those are all billion-dollar companies,
Mhm.
um, all in one room. We got to celebrate some New Zealand successes like VV, Futureverse,
Mhm.
Immersive, Easy Crypto.
Mhm.
I was really, really privileged to host that panel. And I think, this is like, it's exciting. Like, we're in the first inning, like using baseball parlance, we're kind of at the first inning of a 9-inning game,
Yeah.
and we're already so well advanced. So
Mhm.
really excited for the coming year. Also, before I forget, for those of you who don't know us, we're the co-hosts of Token Affairs. I'm Brian Ventura. I'm a partner at Hamilton Locke, specializing in fintech and crypto. The handsome chap to my left, your right, is Trevor Topfer. He's CEO and co-founder of Advertise Global, and he's also executive director of Blockchain New Zealand. Yeah, and so that's the lawyer in me, always wanting to tick the box on everything. Um, I think with with next year,
Mhm.
if you have enough energy to do another
Yep.
one, I reckon we'll have at least double the numbers.
I think so too. We are going to cap it because there are venue restraints. Like Queenstown is one of those places. There was overwhelming feedback that Queenstown was a real hit, and we don't have any interest in moving it away from Queenstown.
Yeah,
And so there's some restrictions. The venues that are in Queenstown, it's difficult to go above a certain kind of number, and I think we'll hit that number. So yeah, we sold out and we filled the venue this year. We probably could have gone a slightly bigger venue in hindsight, but we wanted to make sure the first event felt really really compelling.
mm,
So yeah, wheels are already in motion for Crypto Winter 26. We have dates that we're pretty much locked in. New venue. We're able to upscale things a little bit. So yeah, we'll be sending out all of the initial kind of communications around that in a couple of weeks' time. So if you're listening to this live or you're watching the replay, then make sure you tune into cryptowinter.nz or follow the LinkedIn page for Blockchain New Zealand to stay on top of that. I think, I've had a lot of people, interestingly, reach out to me off the back of it that weren't involved in the first one, that I
yeah,
never even spoke to in the first one, and that have expressed interest in being at the next one. So, the
yeah,
likes of the Ethereum Foundation, the Solana Foundation, some of these huge communities that have heard about or been recommended that they get involved with it, which is a great signal, right? Like the fact that, you get some pretty significant community groups and organizations contacting you and saying, "Hey, we missed the first one, but don't let us miss the second one," is really really cool. So that's a happening thing. And the last thing I wanted to talk about before we get to our guest, which is why everybody's tuned in for today's episode, is to actually hear from our guest and not from us. But I do want to make a bit of an announcement around one of the things that came out of Crypto Winter was a very kind of invitation only closed door session we held on the second
mm,
day around a policy summit where we brought all of the regulators, some government representation, and industry together and had a really good, robust conversation about what's New Zealand's kind of opportunity in the blockchain crypto space and what's the best way to progress that. That's actually taken a life of its own, and we have a digital assets working group now set up, and we've been invited down to government in a couple of weeks' time. So will be in the Beehive on the 14th and 15th of October, presenting to government and inviting government into the second kind of sitting of that working group, if you like,
mm,
to get that conversation moving. So that's a pretty exciting bit of momentum that's come off the back of Crypto Winter, and
yeah,
will be it'll be invitation only. Obviously, I can't have events like that open to the public. You could just imagine, if we've got government in the room and the average punter's rolling on in and heckling from the background, it's going to kind of derail the whole thing. But yeah, we'll definitely be keeping the community informed and up to date with what goes on down at those events in Wellington and what comes off the back of that into the future. So pretty exciting times to
yeah.
be blockchain in New Zealand.
And it's a really important conversation. You see what's happening with Trump when he announced that the US is pro crypto earlier this year.
Mm-hmm.
They're pretty much now the center of the crypto universe. And it's, yeah, the conversations that you're organizing in Wellington, which I'll be a part of, it's super important for New Zealand. So we can capture a big slice of this crypto pie that's really forming.
Well, it's all stacking up right now. And I tried to make that kind of was hoping that was the key takeaway for a lot of those people in the room at the event was the time to act is now. And if we sit around and wait another year, then we're probably going to miss. Even now the chips are being stacked, right? The table's being set globally, and the serious players are already racking up their chips. And if New Zealand wants to have a seat at that table, we need to move, and we need to move pretty quickly. Theoretically, we should be able to do that, right? Like that's our one advantage over everybody else is we're small and nimble, and we're pretty lofty and pretty safe. So I think there's a huge opportunity for New Zealand to participate. But let's see what comes out of the next kind of conversation with government, see how excited they are about participating in it as well. Because without government action, we'll be just sitting around and waiting for something to happen, right? Like, yeah, there's a lot at stake right now, I think, for New Zealand, and there's a really big opportunity. And you'd have to be living under a freaking rock not to know how fast and how big this space is becoming. So let's hope that we get some good buy-in. And if you are in the government and you're a minister and you're watching this now, please come along to those two events on the 14th and 15th. We'll be in your room, in your building, and we'll be talking about everything that's going on in this space. Okay, so that's our crypto winter recap kind of done. I think a good 10 minutes or so there. That was pretty exciting. But I want to get out into the what is it, the meat and potatoes of the episode today, and bring our guest. I'm absolutely stoked to have Will join us on the podcast. I met Will probably about 3 or 4 months ago, so I've only known Will a short time, and the guy's just got the energy, the pedigree, the vibrancy of a real OG. I mean, the guy, everywhere he goes, he seems to turn up gold. Maybe he has the Midas touch, but there's certainly in New Zealand, there's not very many people as well kind of ingrained in the industry here and really pushing it forward as Will is. I did a little bit of due diligence on Will because I don't know him that well. I don't know about you, Brian. You've probably known Will a bit longer, but I know that Will comes from a traditional finance and banking background, which kind of makes him like one of my favorite people because he's seen the light, he's been red pilled, and now he's all in on crypto and decentralization. So I'm really excited to hear about that story. And he also wears a number of hats, a little bit like me. So he's a man after my own heart. He somehow juggles being the head of tokenized assets and a key figure in the wildly successful MakerDAO project. He's an advisor for Outlier Ventures, which is an enormous entity in the crypto and blockchain space. He's an innovation officer at Yala, and I think we're going to talk a little bit about what is going on inside the project there. And he's also the lead at a secret stealth new fintech that's going to take New Zealand by storm.
Yeah, I think we know the secret, but we'll keep it secret for now.
Well, we've got to have a cliffhanger, right? People need to know why they should tune in and why they should stay locked and loaded on Token Affairs. So without any more preamble from me or waffle, depending on which way you look at it, let's bring in Will himself. Ladies and gentlemen, Will Remor.
Hey, guys. How are you?
Hey, Will. Hey.
Well, how are you guys doing?
We're poolside. We're poolside at the Token Affairs studio in Queenstown.
Yeah, our Queenstown Token Affairs studio. Nice to have you poolside, mate. Good of you to wear your bikini. I always think it's always refreshing when a man has the skills and the confidence to rock the mankini.
Mankini in Queenstown. Yeah.
Well, with AI these days, you never know. Like we could be using kind of like a nano banana here and put ourselves in kind of like
Maybe there'll come a time where we can just have our AI avatars come and deliver these podcasts and they can just talk to each other and we'll be spectators in our own podcast. Like that'd be kind of cool, right? Like what's AI Brian going to say next?
We'll
be using your AI agents, mate.
Yep, Avatars Global can power that experience.
I'm working closely with a guy that is actually building that kind of stuff. But anyways, this is maybe for one part of our actually conversation later.
Yeah. I'm excited as well. Like I'm excited to have Will on the show. I've known Will for years, and full disclosure, he's been a client of mine. And this podcast can go on for hours because he's done, as Trevor said, the full 180 from deep in the heart of a bank and TradeFi, and then he's now become a full Web3 DeFi, Jedi. Yeah.
Yeah. That is usually how actually things kind of like work, isn't it?
Yeah, you saw the light. So Will, I'd love to start there. Like, I love meeting people that have done that sort of moment where they've gone, boom, decentralization is the future. I'm all in. Can you tell us about the time? Like, what was your red pill moment, mate? When did it all happen for you?
Yeah, so just kind of like I'll wrap that a little bit with the background, just like to create a little bit like a flavor to it. So so I started working with some of the some of the very first projects on actually tokenization was within banking itself. So I was working with the innovation lab within the CBA group, like ASB and CBA, kind of like ASB is the child company of the CBA group in Australia. And the CBA group, actually, they used to have a pretty amazing team. I don't know how it looks like today, but they used to have like a pretty amazing team internally, doing all things kind of like on the blockchain back in 2016 onwards. So it was quite early, right off the bat of the launch of like Ethereum. They had like a dedicated group that was actually doing all sorts of experimentations with emerging tech, and one of those pieces was, of course, kind of like what is the blockchain? What is this blockchain thing? How is that actually going to impact flows of the bank across the globe? The CBA group is a $1 trillion bank, so it's not a small one. It's one of the biggest ones across the Asia Pacific, and they did a first experiment in bond tokenization back in 2017. So it was actually alongside with the World Bank. They had essentially a bond issuance of $100 million. This was actually one of my first projects that actually I worked with in the group. And at that point in time, and there was actually a couple of projects experimenting the space. There was a project around, self-sovereign digital identity, this bond project, and there was actually some initiatives around like the open banking, right? And I was actually putting those things together at that point in time, and my red pill was really very much kind of like when I realized that open banking and all of like the gatekeeping of the different banks and how flows they would going to keep, and how I guess uncoordinated they are, or how much they don't trust each other. Actually, like most banks, actually they don't trust each other. So how hard would be to pull that together, and how long that would take. And when actually I put those two things, kind of like the fact that there was actually this infrastructure here that would allow programmability of money and open banking, and that dream that eventually open banking was going to take the world. I said, like, by the time that this one here, the programmable money infrastructure actually scales and the infrastructure is in place, this other thing here, kind of like open banking, is going to be completely obsolete. We will not even need it. And that was my red pill moment. At that point in time, I spent pretty much kind of like 15 hours days learning everything that I could about this space. I jumped off from banking. I used to be a quant within banking. I jumped off from there, went on to work for a smart contracting auditing engineering firm that it was actually from New Zealand. They don't operate nowadays anymore, but like used to be called Blockchain Labs. And then we started interacting with all of this crazy kind of early experimentations, pre-DeFi, like the very first kind of like ICOs coming out of white papers and actually building some shit. I'm kind of like talking about the 2017, 2018 kind of life cycle. And and then got to interact with some of the ones that were just like coming out of white papers. That's when I discovered Maker as well, because some of those were clients of actually the auditing firm. And when I discovered Maker, I said like, oh fuck, this is so cool, because it's exactly what I've been looking for. Is like mixes up my quant background alongside with the smart contract engineering stuff that I was learning at that time. So like, I want to work for these guys, and they were the only ones actually. Well, a couple of other projects, Aave as well. The previous generation of Aave Etheland, it was one of the only projects that were actually had leveraged Ethereum and built something on chain, trustless, decentralized, kind of like super complex code base. And I reached out actually to the guys and said like, hey guys, I've learned this stuff and my background is this. Can I somehow kind of help you guys bring this to the next step? And they said, we always have people that actually either learn, like know very well finance, like quantitative finance, or learn or know very well smart contracts. We don't have a lot of people that have both. And at that point in time, the guy said like, yeah, come work with us. And I was actually the second quant within the Maker team.
Wow.
So that was the beginning of the story.
Yeah, that's amazing. And I like a couple of things that came out of that story that landed well with me is 2017 open banking. It's a thing, right? Like 8 years later, and it's still
sorry for my French, and I communicate this because it actually makes things clear. It's been a fucking decade. Wow. Right? So it's like how low can you be? Right? It's like a decade. Like imagine ourselves now today, another decade into the future. Fucking AI robots are gonna be taking over the world. Like how slow can you be, right? Like you can't be any slower than that, right? It's like, so it's just incredible, like that things are that slow. So I didn't have, at that point in time, it was kind of like an interesting space, like interesting moment in the career, because I had enough experience to understand stuff, but I wasn't kind of like a 40, 50-year-old guy that had already sit on his stuff, and I was already kind of, so enough experience to know some things that I could use, some tools that actually I could use, but not too much experience that I would say, oh, in my days, it was like this. Or, that kind of stuff. So it was actually a good sweet spot. So it's still like the whole kind of like ambition and drive.
Open-minded.
Open-mindedness, but not the one that would kind of like prevent me from looking at anything new and saying, I'm too old for this kind of thing.
You talk about Maker, and for those who don't know, Maker is one of the most successful stablecoin projects in the world. And they operate a decentralized autonomous organization for governance of the protocol, and they're also over collateralized. They have an over collateralized stablecoin. And Will, we'd love to dig into the weeds of what's the alpha. Working with Maker.
Are we buying DAI? Is that the alpha?
I think the alpha in this space, it is a constant shifting thing, and I think this is the nature of I would say now financial markets, because I'm already kind of like, my mind is already there. This is already financial markets for me. People still kind of like separate, there's this thing that is financial markets and there's this thing that is crypto. Not for me anymore. But I understand that people that are now looking at some of this and say like, oh, this is all new. I said like, no, Maker as a project is 10 years old. Maker is a 10 years old project. Just put that in your mind. Like, imagine now back into the previous moment of the internet, when Jeff Bezos and other guys kind of like, built Amazon.
Selling books.
And then you say, selling books. And then you say like, oh, Jeff Bezos building Amazon in 1997. And then you say like 10 years later, would you still actually consider Amazon to be a new startup or a new thing? Yeah. For a lot of people that were actually in technology, it wasn't anymore. But for a lot of people that took another decade, like banks actually, to integrate kind of like, cloud, it was innovation. So it depends on where in the spectrum you are, right?
Yeah, I think Steve Vallis, who got up on stage at Crypto Winter, and he had a statement about this. He said, "Stop saying we're early. We're not fucking early anymore. We're just moving too slow." Right?
Exactly. if you're a snail and you only see snails, you think you're actually moving fast. But if you're a snail and you see a Ferrari going right next to you, then that will give you some perspective, right? So that's the thing. So yeah, I guess from my perspective, I've always been wanting to be close to the Ferrari. So actually, I still feel that I'm running, but it's just that I'm not alongside with the snail, because otherwise I would feel bored to be actually alongside the snail, and that was actually banking for me.
Right. Yeah. Well, I have this expression that kind of encapsulates all of that really easily, and it is, you get the Bitcoin price that you deserve. Right. So all of these they're coming into the space now. You know, like in 10 years they'll be like, I was in Bitcoin at 110. You know.
Yeah. Exactly.
I paid 100 for my first one. Yeah, it's a really interesting. You know, the way, like what I think, what I'm seeing, and I go back to 2012. I'm one of these sort of Silk Road dudes that you know, discovered the seedy underbelly of the internet, and that was far too appealing for me not to kind of investigate it further. I ended up buying a Bitcoin so that I could buy stuff on Silk Road. And then Silk Road got shut down, and I never got to spend my Bitcoin on anything on Silk Road. And then I sold the computer that Bitcoin was sitting on to someone not knowing really anything about it.
Lucky person.
You know, and then yes, I probably reset it, or they reset it or something. But anyway, you know, not as bad as the dude that wants to dig up the dump because he's got $190 million worth of Bitcoin sitting on a hard drive.
Or the dude that actually bought the $10,000. I mean, the pizza. The $10,000.
Yeah. I mean, to be fair, it's 2 pizzas. He got 2 pizzas.
Yeah, exactly.
Yeah. I mean, well, you know, we started working together like 4 or 5 years ago, and even before tokenizing real-world assets was a thing, you and I and Jeremy Muir were already talking about how can we put real-world assets on the blockchain? How can we put debt products on the blockchain? Tell us more about, you know, what are you working on now? Because, you know, that's 5 years. That's 5 years on. Like, you must have a lot of things to share.
Yeah, there is the evolution in this space of tokenization. Tokenization of real world assets. I mean, I don't really like the name, but it actually kind of like it's catchy. It's essentially kind of like on-chain securities for the most part, and then there's aspects of it that are kind of like not necessarily kind of like securities the way that we look at it. But I think this is not necessarily kind of like new on its own. So it was like I was just talking about earlier. Some of these experiments that some of the banking counterparties were doing around tokenizing assets that were actually on their balance sheets, like mortgages or mortgage pools, and this goes back all the way to 2017. It's just that actually 2017, 2019. So actually kind of like that is not new on its own. It's being around. We just didn't call that way. We called, STOs for short, for those that actually being around long enough, like security token offerings. It's just that actually what I think the key change between that phase and today is that we're finding mechanisms not only to tokenize the assets, because actually the tokenization of the asset on its own is not all that difficult and is not all that interesting. I think both of them. What is interesting in this phase is that we are finding ways of plugging in, plumbing those assets on chain in such a way that we can use the same tooling and the same tooling capabilities of DeFi that previously were not available for the market. This is the innovation. The innovation is not the tokenization. The tokenization is essentially kind of like me kind of like wrapping up an asset and then just telling you, here you go, this is the asset, just like in different form. Before you used to have like cash, now you have a bank account that represents bits. If all that it is then that's not innovation. What is innovation, for example, like between the cash and the bits, is that now you can flow. That cash is not only kind of like limited to you paying someone in cash physically and you have to be in the same place. Is the fact that actually that moves now. Those bits kind of shit can move at here's lightning speed. Tokenization has a parallel to that. It's like that is not the fact that I used to have like a I guess bond paper and then bond digital version and now bond on a blockchain. Like the evolution between digital version and bond on the blockchain is not that big unless you add something that you cannot, or most people cannot do with that bond. And that's where kind of like the DeFi comes in, which is, for example, the toolings of DeFi that, I mean, basic toolings of DeFi, for example, is you being able to utilize your own assets in a self-custodial way. You're not trusting anybody. It's actually in your wallet. And you actually put that asset, for example, into a lending market like an Aave, a Morpho, etc. And then you utilize that asset to be able to leverage against that asset, borrow more potentially kind of like taking kind of like split the asset between principal and yield and all that kind of stuff. This is the innovation. The innovation is not the tokenization itself, right? So, and a lot of people kind of like, again, those things kind of like evolve, like because they've seen kind of different phases. Before it was like Bitcoin and they didn't understand Bitcoin, and now they actually, 15 years later or 12 years later, they understand it. The same thing is going to happen as well with tokenization. The people that actually are not involved deeply into this space are going to look at tokenizations like, what's the benefit? It's just a digital version of bond. You're missing the point. The point is not the fact that it's a digital representation on chain of the bond. Is the fact of what is it that you can do it, that you couldn't do it. How many of you have ever kind of like bought a bond ETF, for example, that you went into like, I'm earning 3-4% of this bond ETF. What if, just answer that question. What if I can, is it still a pretty low risk asset, like for most developed currencies because they are kind of highly rated. What if I could leverage, keep the same risk basis, but leverage asset to 3? I will transform the yield from 3 to 9%, and I'm keeping the same credit risk basis.
Risk.
Alpha. This is alpha, right? You can't do that in the ETF market today unless you are an institution. Yep. And even that is still full.
Well, that's how the ETFs are running, right? Like they are doing that, and
they are doing that at the back through treasury operations, right? But you retail, you have no fucking clue that happens, right?
Yeah.
Like, you retail, like even like smaller institutions, you have no idea. Like how many corporates they don't even have like good enough CFOs that knows that those instruments exist in the market.
Well, this is why all of these big traditional finance institutions are coming into the space, right? They're building these treasuries, they're building these ETFs and these products off the back of it so that they can earn the 9, 12, 15, 60% over time and sell you 4 or 5% as a retail investor. So, it's interesting. You were talking a little bit before, Will, about digital identity and financial sovereignty. And those are two big passions of mine, because I think without digital identity, we don't really have decentralized money, and we don't really have the opportunity or all of the opportunity that decentralization offers. And then, this idea of financial sovereignty, which I think is both a blessing and a curse, right? Like people who understand the benefits of financial sovereignty on chain, using, like we're just talking about, the benefit of me being able to take advantage of that leverage rather than an institution on my behalf taking advantage of that leverage. That comes with inherent risk. And I think that's what puts a lot of people off this space. I'd love to learn a little bit more about your background. When you started your story, your red pill moment, you were talking about digital identity and financial sovereignty as a part of this overall project within a major financial institution. And here we are a decade later or more, and we still don't really have much progress in that space. What was the kind of learnings that you took from that, and how should people be thinking about financial sovereignty and digital identity as we move forward?
I'll actually always split the conversation, because you had like quite a few points in there that actually you're just talking about. So you're talking about like, self custody, sovereignty over your own money. You're talking about, aspects of like financial literacy and then kind of like digital identity. So they're like kind of like wrapped up in three pieces. So I would just like, kind of like full disclaimer. I was actually having a chat with a mate of mine actually the other day, and we were talking about the fact that a lot of people nowadays kind of like they're feeling that being left behind economically, etc., right? And actually I was actually coming to that realization, right, that when you think about it, and I'll come back to the original point. When you think about actually the number of people that actually have a reasonable understanding of money and how money works and how to make money, let's assume it's kind of like people that work in financial services, but that's too high of even like a cohort. The cohort is much smaller than that. The vast majority of people that actually work in financial services actually are doing clerical work. They actually don't understand how money works.
Yeah.
Like full of compliance professionals, support professionals within banking, like this kind of stuff. They don't have an understanding of the mechanics of money at different levels of understanding, right? And then, so actually that cohort is already pretty small. And then you say like most people actually don't work in financial services. The vast majority of the global population that work in financial services. So it's even smaller. So when you think about it, if there's 5% of people in the globe that actually have a pretty good understanding of financial services, I would say that's a lot. It's not even that. And that kind of explains why all of the financial services kind of like doesn't really serve people, because actually people have no clue what they do behind, and most people that actually work inside have no fucking clue what those companies, that the purpose of them is to make money, how they do it. The purpose of a company that you work for is that, and you don't understand the purpose.
And those institutions are notoriously good at masking all of that shit, right? Like,
absolutely, because it's a very small subset even within the institution that actually understands how the machine works, right? So anyway, so like coming back to the sovereignty. So one of the liberating aspects of DeFi and in financial plumbing on chain is that if you are curious enough, and if you are, I'll say that not in a pejorative way, if you are, I guess, autistic enough, almost, to go down that rabbit hole and learn by yourself, you can actually gain some amazing tools that you could never have dreamed of unless you had worked in the exact right department within a banking institution. You can do that in DeFi. You can't do that unless you've been a select person that has, gone through all the right academic stuff, then all the right kind of like certification stuff in financial services, have friends that can kind of like bring you in, all that kind of stuff, like all of that. It's a lot of ifs to get to just, oh, cool, I'm a select group within asset management industry, investment management, investment banking, etc. Right? You can do that in DeFi without having any of those credentials.
And I think there's
so long as you're curious.
I think there's a much bigger reward. Like if you go down that rabbit hole in traditional finance, you'll probably get an understanding of these systems and how money works and how these companies are making money. But there's fuck all you can do about it. Like you're an observer in that train, right? Like you might be able to make a few more educated bets and maybe get a bit of benefit. But in the decentralized space, in DeFi and crypto, more power to you. The more you know and the more you understand and the more you're paying attention, there is a very much like a trade-off, a linear trade-off. The more you put in, the more you get back. It's not like this,
And the more you understand things like arbitrage opportunities as well that exist in those different markets, like in the inefficiencies there are. Because again, one thing is actually the market being on chain on its own, like the bond being tokenized on its own, is not a guarantee of virtue. What is virtue is the ability to actually be curious enough to go and understand it.
Yeah, I mean, the number of people that own crypto that aren't staking it and earning nothing on it.
Exactly. Or they don't know the toolings that they could use actually for that crypto. So yeah, going back to that. So like the tool is there, like the same way that the internet was there and people could actually be spending all of their time learning and actually upgrading themselves, but actually they spending time kind of like TikToking and kind of like watching short videos. The tooling is there. The same thing actually in the blockchain space. The tooling and the plumbing is there. If you're curious enough actually to dig, you're going to find some absolutely amazing things within. But again, this is the kind of like absolute kind of like, libertarian view of like self ownership, like centered, like locus center on you. But I don't think crypto will necessarily kind of like change more like the human patterns of that kind of stuff. So things that crypto has already started on that journey of creating mechanisms where it's like, hey, all that you care about is for example, like a yield. There are counterparties that kind of like manufacture and provide that yield back to you.
We talk about opportunities. Yeah, I mean, that's great, Will. We talk about opportunities, and like probably the biggest buzzword this bull market is stablecoins. And you've worked with MakerDAO's stablecoin project. You've worked on Easy Crypto's stablecoin project, if I'm allowed to say that. And now you're working on another stablecoin project, which I think it's super interesting because there's not many people really building on Bitcoin. And tell us more about how your new Bitcoin-backed stablecoin project works. Let's dig into the details because I can definitely see parallels between MakerDAO's stablecoin infrastructure and Yala's stablecoin infrastructure.
No problem. So like in terms of like just for setting the ground here in terms of like the stablecoin and the stablecoin evolution of like the stablecoin ecosystem. So you have this, I guess, two key groups. There's more variations of it, but like to keep things a little bit simpler, you have like these key groups like the regulated fiat-backed kind of like stablecoin, such as Circle, that has gained a lot of momentum in the last few months since its IPO. And then you have like more like the DeFi stablecoins, which are fully managed and operated through smart contracts without a banking rail sitting at the back. So that's kind of like the two key groups. Maker and Yala sit on the kind of like that DeFi stablecoin. The DeFi kind of like mechanisms actually for the stablecoin, and NZDD by Easy Crypto, which I architected actually for Easy Crypto, sits in more like that Circle fiat-backed kind of like stablecoin. The innovation is much higher to several levels of magnitude on the DeFi-backed stablecoins than it is on the fiat-backed stablecoins. Just like laying the ground. So the way that actually kind of like operates is that it operates through this mechanism that's called like a CDP. So it's a collateralized debt position, which effectively is a big jargon way to say that this stablecoin has over collateralization of assets. So essentially you have more reserves on the assets that you have liabilities, essentially the token, which represents the stablecoin. So I like actually to describe to people the way that stablecoins work is like you look at a balance sheet, right? If you have like basic kind of like accounting kind of like understanding, kind of like on a balance sheet, usually you have like your assets, you have liabilities. And on the CDP stablecoins, your assets are essentially like crypto native assets, Bitcoin, Ethereum, Web3 native assets, other tokens, right? On your liabilities is the issuance of your token, which is essentially, in the case of Yala, YU, in the case of Maker, DAI. It's essentially kind of like it's your liability relative to the asset. Here, the mechanisms for making sure that you keep yourself over water is that those assets, even though we're talking about like volatile assets here, like both Ethereum and actually Bitcoin, they don't get under a particular kind of like safe threshold of over collateralization relative to what you have on your liabilities, right? Because if that does, this is what is different than a fiat-backed stablecoin. If you don't have, say, 150% more of Bitcoin relative to what you have in terms of like assets, the system will rehypothecate actually that, will take essentially that asset from you and will liquidate that, in the case of Maker, in the market through a Dutch auction mechanism, or in the case of Yala, through a stability pool that essentially like cancels that debt in the system. So actually the system doesn't enter into under collateralization, which would depeg the stable coin, and then collateralize back the system and pays the remaining collateral back to the original user. And the stable coin is burned out of the system, okay, through that process. So this, like, the mechanisms are similar. What is different, for example, between Maker and Yala is the focus of how that works under the hood. Within Maker, Maker was always built with a EVM Ethereum focus first. So that means that actually everything that was about Ethereum and the evolution of Ethereum assets, including kind of like staking through Lido and others, plus Web3 native assets on Ethereum, were always the priority for Maker. Maker started as a ETH-backed stablecoin, right? So that's how ingrained it is in the Ethereum ecosystem as the first kind of like CDP stablecoin on Ethereum. Going back to 2014, Yala was taking an opportunity that was actually a little bit different. It was like there's this dormant, huge capital base, which is Bitcoin, that is more than $1.5 trillion more in the
big gorilla.
Nobody is using it for anything.
There were a couple of attempts.
Other than
there were a couple of attempts, right? They tried to do the inscription thing, and they tried to make them into NFTs and all that sort of stuff. It seemed to burn out.
Oh yeah, ordinals,
ordinals, runes, all that kind of stuff. These were kind of the key thing here. The key challenge here was actually because building on Bitcoin is hard. The system was not designed for it. Bitcoin is essentially, in the if you have like use a TradFi comparison, Bitcoin is the equivalent like of a mainframe. It is the equivalent like of a mainframe to the banking system. It does its thing, it works, but it's not that great, right? It's like so it's not made for programmability of money, right? So that's why kind of like all of these experiments actually come out of like Bitcoin on the layer 1 Bitcoin. They tend to be kind of, oh, cool, I cracked something here out of like all of these constraints that I have to build in the system. But they never do something as cool as like, oh, here you go, like in Ethereum, kind of like, oh, Solana, like I've built the whole financial system on chain. What about that? Right? It's like, it's the level of magnitude of difference in terms of the
it's so weird. Like every time I think about this, I just, why Bitcoin? Like, it doesn't make any sense. It's become the kind of the foundational ground level, right? The store of value on chain, like almost like the gold
digital
reserve.
Gold.
But it doesn't make any sense. It doesn't. If we all agreed tomorrow to stop buying Bitcoin, it would go to zero. But Ethereum could never go to zero because, and Solana's in a similar boat, because there's just so much infrastructure and technology and products and systems being built out on that chain that there's that level of commerce can never go away. But Bitcoin's very different. It's weird. There's just nothing there. It's so.
But there's a timing thing as well, and I think the biggest timing effect that exists in the system is the timing of never being hacked. So there's actually an element of it that is actually the beauty of crypto system is like, if you've been around for long enough. And Bitcoin was not even actually the first version for like that actually Bitcoin did, just cash and other mechanisms.
That's right, yeah.
But is is like, if you've been long enough in that and you've proven yourself as having enough of kind of like almost like a semi-religious capacity, and you've proven the case that actually money could flow trustlessly without an intermediary counterparty between them, that in itself is the bet that everybody says. Is like, we're betting on the fact that this represents our future. They're not buying, like, nobody is buying Bitcoin because they think necessarily, like, at least not the ones that actually understand it, like, because they're saying, oh, this is eventually kind of like be made programmable, like at a very high light scale. Eventually will process trillions and trillions of dollars of actually market value, a complicated market value. Nobody.
Bitcoin doesn't have smart contract features.
It doesn't have any of the smart contract features, but it has that kind of like symbolic mechanism around it, which is like, it was the first time that we managed to scale some mechanism of like digital cash that could transact between two people. And that has the value, is the value of it. It's almost like the value of art or wine, if you will, is the fact that I've had that actually bottle of Lafite for that has been around for 200 years. That has value, right? And that's, I guess, the value that people put on Bitcoin, is the fact that it represents representative of an evolution of money, and that people will keep as almost as a collector. But anyways, but it has lots of constraints, technologically speaking.
So speaking of smart contracts, which I think is that was my red pill moment when I really understood it, was when I really understood smart contracts and the power that they have to transform industries and transform legacy systems and legacy ways of doing things. And circling back to, I guess, the real world assets conversation, and understanding it. I know you're building on Solana. I know that there's a lot of projects built on the EVM around tokenizing real world assets, and particularly in property. I'd love to learn a little bit more about why you guys have chosen Solana as the chain. Like, what is it about Solana that you see as an advantage over some of the other systems? And is it as simple as just the cost per transaction is much lower because the network's not as busy yet? And what are what classes of assets are already available, and what are where do you see it going in the future?
If I'm actually moving the conversation towards real world assets.
Yeah. Just to get away from the kind of heavier Bitcoin conversation, and try and get us back onto the reason why you're here, which is to talk a lot more about sort of stablecoin and the role in tokenization.
Yeah, sounds good. No problem. So the Solana is actually kind of like an interesting use case. I find almost like if I had enough time, probably would be academically interesting actually to study it a little bit more. The key thing that I think Solana has managed to pull off, which is actually not easy in this space, it was that it leveraged internet community kind of like characteristics, and kind of like which were all about
tribalism.
No, I would say like more like internet community around like the importance of the meme culture, and the meme culture around Twitter, Farcaster, and other communities, actually really leveraged that very well, but actually did that as a way of, I don't want to say vampire attack, but kind of like bring in that user base that was kind of like fun of like that traffic, right? So it's kind of like created the it's almost like through play, it created a world around itself, which was not necessarily kind of serious in terms of like that user base that was actually around. It was more like a play. It's like the same way that people were kind of like doing memes and spending time writing different kind of like memes for exactly the same photo over and over and over again, created that culture of meme coin and meme coin kind of like trading. But then at some point decided like, we got to actually leverage that we have all of that user base for something that is beyond meme coin trading, meme coin activity. And they actually has been one of the only ones doing that very, very successfully. So it's kind of like it converted, because like, well, all of this meme coin trading and all of this, we have some solid projects that actually have built on us already, have built some of that DeFi and financial plumbing within it. Now let's actually kind of like try to transform, because actually the meme coin kind of like and all of the different kind of like hypes that actually Solana has managed to bring in it on it has diminishing returns over time. So actually managed to take all of that treasury that it had accumulated through the meme coin trading and retransform itself into an avenue where actually serious assets could also be traded. It's actually been incredible what they have pulled out from that point of view.
The kids had fun. Now the grown-ups are here.
Exactly. The kids had fun, but the Solana Foundation had enough money to also be injecting into serious projects. That's the thing. And that's the thing that I guess differentiates it quite substantially. Not from all of the EVM, but definitely from Ethereum. Ethereum has always been very research-based on some academics and some other researchers that were all about kind of
project, right? And then the kids got a hold of it, and it was the other way with.
Conceptual. Like Ethereum was always more conceptual. Like it was more conceptual, was more abstract, was more about the future. And even today, like if you are an avid reader of blogs that actually Vitalik actually produces, he spends a lot of time thinking about high, deep kind of like conceptual things instead of how am I gonna actually bringing the next RWA on chain, how are going to actually kind of make that all loop and create all of those financial markets. That's not what he is interested in. He is interested in like a future of humanity where programmability will be everywhere, and actually blockchains will be ways of potentially, I guess, prevent things like, authoritarian regimes and the like. That's a very different conversation that it
censorship proof.
Censorship resistance and censorship or tampering proof and things like that. Whereas like the people that actually are behind Solana, no, they're talking about fucking business, right? So it's like it's very, very different, the mindset, right? And because now people are actually, I'm serious, I'm actually bringing all of these assets. Let's assume here like an investment bank or an asset management firm. I'm okay. I've spent years convincing my board, and I'm actually bringing now these assets on chain. I want them actually to operate. On the other side, do you want to have, like you're going to still use Ethereum because it has proven its case. But when you evolve away, like beyond, not away, but beyond Ethereum, on the other side, and you're talking with your board members, can we talk to someone actually from your chain? And all of a sudden kind of like imagine like as an asset manager, like bring me someone that is going to be talking about the future of humanity and censorship resistance and the conceptualizations around distributed AI and the centralization of AI agents and all that kind of stuff. That manager will say like, okay, that's really fun. Can we have a beer together around that? I want to talk about actually my assets that I'm putting on chain right now. He's not going to find that person in the Ethereum Foundation, but he will find that person actually in this.
I had.
That's quite different.
I was building a project a while back with a group. We were trying to build a kind of like a LinkedIn type play for recruitment, and we were building on the Solana chain. And we found that the Solana community were incredibly engaged and incredibly supportive. And very different because my background's all ETH. Like I said, I fell in love with smart contracts. I went very deep on the Ethereum network. All of the projects up until fairly recently that I've been building in and working around have all been based around the EVM. But that one project that I worked at for a little while, a few months or so, helping them out, it really gave me a little bit of an insight into the Solana community, and I fell in love with them. Right, it was still mostly the kids. There was a couple of early stage grown up kind of plays, and we were one of them. But I found that the community itself is really, really engaged and supportive. And we were getting developers and people coming out of the woodwork just to jump in and say, hey, you've got a problem, I'll help you solve it. And that was really remarkable. Is that still the case? Is that Solana kind of mindset still there? Or is the chain kind of grown up a little bit from that?
No, I think there's still quite a bit of like the fun aspect, and you can actually kind of like gather that a little bit like to the way that actually even like the applications actually are constructed within the Solana ecosystem. A lot of the UI in those applications are kind of like tend to be a little bit more like, you know, funny, kind of funny looking ways, different color palettes and all that kind of stuff. And the way that actually they flow, they tend to be like, oh, is this actually serious or not? You don't actually, you never really fully know from kind of like a front end perspective. But at the back end, the reality is actually there's a lot of like very smart teams kind of like building some of those protocols that actually are running that. So that actually is very solid. It's no longer only kind of you know, another meme coin trading developer or something like that. There's a lot of like pretty solid smart contracts that have been deployed there. Maker itself Maker has done most of its journey on Ethereum. And even when actually kind of like EVM like stable blockchains like you know, Arbitrum and others start actually scaling, Maker still hadn't actually gone full on to kind of like creating bridges to those. And it did actually on Solana, like through Sky, right? So it's kind of like it took a long time for Maker actually even to evolve. So this is a proof that actually things can like move as well into that Solana. And the smart contracts within Solana, some of like the modules of the smart contracts actually are to an extent actually more advanced than actually the stuff actually that you see even on the EVM space. So there's a lot of that, but also like there's a lot of like supporting communities around it, I found. So like one of the mates that actually I worked with within Maker through Centrifuge, he went on to be part of this team, which you guys actually can put maybe like links in the show notes later, called Super Team. And essentially they have like all of these amazing communities all over the world. So like Super Team, and actually they set up kind of like almost like hackathon, developer kind of like resources, developer grants, and they do talent recruitment of like of developers in different jurisdictions. And they run all of that kind of stuff. It's so Solana sponsored, so it's actually very active from that point of view. And I would love, by the way, this is actually an idea. I hope you guys actually take that up. Actually, create a super team in New Zealand. Like a lot of like small jurisdictions, like, you know, Singapore, I guess Singapore, Ireland, Vietnam, they have absolutely massive and super active kind of super team teams, and those guys actually are everywhere. Everybody that I've talked to kind of sound like, oh, the super team is fun, right? So it's like, yeah, I would like New Zealand would have that kind of like mindset to have like a community that, you know, is fun and is building things, kind of like connecting protocols globally. I would definitely recommend to have like a look.
Yeah, there's an interesting arbitrage, I think, right now in our space, and I'll just bring BV back. There's an interesting arbitrage in the industry right now, because the community is still quite small. I mean, we talked about it's 10 years old, but it's still quite small on a, you know, if you look at global systems and the communities that build on global systems. The idea of just having a hackathon or having just building a small local hub that anyone can start, they seem to scale very quickly. I think there's a lot of opportunity there. I mean, we've been talking about doing something like that inside of Blockchain New Zealand. We've had a couple of opportunities to work with some people in the region to do something like that, and maybe we will. But yeah, I think there's a really interesting opportunity, and perhaps, you know, the super team at Solana that you're talking about, you know, getting those sort of little communities up and running, they can grow and scale quite quickly when you find people. And like you say, people in this space are, once you go down the rabbit hole and you swallow the red pill and you open your eyes up a little bit, you sort of you become incredibly passionate about what the mission is of all of these blockchains. You know, we haven't yet really hit the my blockchain is better than your blockchain kind of state yet. We're probably getting there at some point, but for now, everybody's kind of like, you know, decentralization is a better solution for most people in most industries.
I think we've passed that stage, to be honest with you, in terms of like my blockchain is better than your blockchain. I think we're pretty much past that stage. I don't know. Again, depends whether you're the Disney or the Ferrari. Like from my point of view, I think we're past that. Like a lot of people that actually are building now in this space and evolving in this space are all looking at things from a cross-chain perspective. They're not looking at a single chain anymore. Like I haven't had a single conversation around a single chain in 8, I think, years now. Like, and it's so yeah, we've passed that stage, and now it's more about some very, very strong projects that are still in pre-release phase that actually been talking to, which are how to mirror and virtualize things cross-chain, so your experience of one chain, no matter where you are, actually can be replicated across any chain, and any chain that you operate looks like you're with all of the different chains. There are some very, very smart folks building in this space in that, and I think this is gonna be absolutely revolutionary when actually it's full operational.
Interoperability thing, right? Like Brian.
Interoperability,
Brian loves it. That's the big kind of conversation still. It's been a conversation for a while, but we're seeing progress, right? There's bridges being built. There's communities that are coming together to try and, unify in some way, shape, or form these similar technologies and allow these communities to meld and move together, and almost negate the need to have to build your own blockchain, which I think we're also.
Oh yeah. Blockchains are still being built. Sometimes there is actually a reason for them actually to be built. For example, like some of them, like going back a little bit, like some of the BTC L2 blockchains, I think there's actually a reason, because actually there's a need for those blockchains actually to be in place. But a lot of like other EVM like blockchains that actually are coming across the Ethereum ecosystem, it's mostly like, I mean, I'm going to be honest here, it's mostly like a VC. It's a VC play to be able actually to launch now tokens and future exit actually on retail. Let's be honest. Like a vast majority of them are like, there has very little activity within them past that stage of actually early launch. But I think there is still some where kind of like either managed to build communities around themselves, like Solana, and some that have been actually quite linked to an extent to kind of like to a bigger ecosystem of distribution, like such as Base, right? It's very clear, like, Coinbase is there, USDC is everywhere on Base, so it's kind of like it's that ecosystem. And upcoming, I think to an extent, like Plasma with with the Tether kind of like is stuff into it. So when they already have like the distribution ecosystem, so actually those blockchains actually become pretty big. And then people build on it because they actually have incentives, because the liquidity is going to be there. I mean, Plasma is going to, it's going to be, just to get started, we have like $2 billion. You become already a top 5, right?
It's alpha there too, right?
So it's so like you have that kind of stuff, but then you have like, for example, like the BTC layer 2 were actually needed because BTC was so clunky. Nobody could build on it, but they still want actually to hook up to that BTC security.
Yeah, that's right. BTC, I mean, that's going back to 2018, the scalability wars that ended up becoming Bitcoin Cash, and then all those other Bitcoin derivatives. And I think, interoperability, that's probably been one of the low-key big innovations the past 5 years. Like we've all been in crypto for nearly 10 years, and before it used to be, what was the Ethereum killer? There was Neo, there was EOS, but then now, because everything's interoperable, you can just wrap assets, move them onto another chain. Now it's all about, let's find a use case for this particular layer 1. Let's build a real community and solve a problem for this layer 1.
Or the layer 1 actually might have specific distribution channels that actually that you're chasing, right? So for example, like if there's already, for example, like if Base, for example, has a particular kind of distribution channel in that chain that you're pursuing, then actually that's what you're looking after, right? Like you're not looking after the fact that like, I'm just deploying a chain. I mean, some do, just for the sake of it. Like sometimes it's because you're actually looking out. There's a particular kind of angle, I think, like there that you're going to go and deploy in there. But eventually, to be honest, I think like most assets are just going to be deployed everywhere. And then over time, there will be where they're going to be traded is actually what people actually are going to be coalescing towards. That's already kind of like the case.
So there you go, folks. You heard it here first. Just because you can doesn't mean you should.
That's right. That's right. I think that summarizes.
There's a lot of that in blockchain because it's such an exciting space and people get so passionate about it. It's like, oh, I can do this, and so they do, and then a whole bunch of people go, well, there's an exciting product, and then we put monkey pictures in them and pretend that there's something more significant than that. Look, I'm just conscious now we're well over time, and I want to try and wrangle this conversation back and try and point it towards an end because we could, as Brian points out, carry on for the next 3 hours. But I did want to ask,
become like you guys become a Joe Rogan show by that point.
Yeah,
we might as well actually bring the cigars and the whiskey
here. That's a good idea. We'll do a late night
around and talk bullshit for 3 hours. Look, he's made a pretty successful run of it. I want to ask you a question that might be a little controversial. It might be a little bit out there, but it might be a way to kind of bring this thing to a close. You've invested an enormous part of your career in this space into stablecoins. You're probably, in my opinion, one of the most knowledgeable and kind of leading guys in that space. I want to raise the elephant in the room. What do you think about CBDCs? Is there a future for CBDCs? Is this a whole lot of bullshit programmable money for governments to try and clip the ticket on the way through, or is there a real legitimate use case for a CBDC? And what's the conversation like in your world? Because I see them as almost like competing forces, right, or almost like polar opposite forces.
To be honest, I don't see that way as much, and I'll explain. Right, I think again when I look at this space, I really look at that kind of at the phase that we are in. Right, we are bringing the full capital markets on chain. It will take many years, and we will have several iterations of that. But the direction of travel is extremely clear. It couldn't be any clearer unless, as you mentioned earlier, you're living under a rock, literally. From my point of view, kind of like I started that journey of literally there was the thing like the red pill was like, oh, this open banking shit is gonna actually become obsolete. Actually, there was without knowing now, maybe in hindsight, I was actually making a comment, like a bet with myself that actually the markets would be fully on chain at that point in time, 8 years ago. The stable coin versus CBDC, I think, to be honest, we are gonna be evolving towards hybrid mechanisms. I don't think it's gonna be necessarily either or, and I'll explain myself. So like, if you consider, for example, like the biggest portion of the dominance of like the stablecoin market today come essentially through two sets of players, right? It's essentially kind of like Circle and Tether, each of them with their strengths, and then you have like the whole kind of like other versions of that,
like Binance and Ripple
variation. Binance, Ripple, USD1 through the Presence family, and other tokens, plus all of the DeFi variations of it, Ethereum, Sky, etc. Like most of like those stablecoin, like the big ones, like what are they? They kind of like already are wrappers on government debt.
That's true.
Right? So they already actually kind of, to be honest, the biggest success of them is that actually they are some of the biggest holders of government debt. So actually, they're some of the biggest, effectively in other ways, they are some of the biggest lenders into the US government, right? They are replacing literally full countries now. like as the lenders to that US government. So if you really bring that back to first principles, CBDC is tokenized cash, is non-yield bearing, right? Like by principles, if you are the one that actually can issue print currency, you are non-yield bearing. It only becomes yield bearing when it becomes debt, for example, issued by a treasury of government. That's why you have a separation between a Federal Reserve or like a reserve bank and the department, or like in New Zealand, the debt management office, who actually issues the debt, the bonds. The separation is because one is yield bearing because it's a promise into a future, kind of like, oh, we'll pay you because I have to cover my deficits, and the other one is like, I have the capability of just, I guess, printing money. Of course, I'm oversimplifying. They actually have repo markets and have actually collateralized that kind of stuff. But so already there's not so much of like a big difference in delta between the way that Circle already operates, being lending money to the US government, and a CBDC, which is kind of like I think the fear factor is the fact that people's like, oh, government control, blah, blah, blah. So like, have you talked to any bureaucrat in the last like 10 years? How much do you think that they are actually act at speed and actually even care about knowing what bread you buy in the morning?
And in all honesty, if you talk about this programmable money and the government's got control and they can cut my cash off, anybody who's ever had their bank accounts frozen knows that they don't need CBDC to fucking shut you down. If they want to shut you down, they'll fucking shut you down. That's the reality.
The custodian already does. The custodian already does that with your money in the bank. And Circle or any of like the stablecoin providers, they have this mechanism here. Go and look into their smart contracts called blacklisting. They add your address in that blacklisting. You're not going to be able to move your money. You're not going to be able to do any transactions. So it already has that power. So what's the difference between kind of like a private entity doing that and a government bureaucrat doing that? Maybe, to be honest, in some extent, maybe a government bureaucrat is not such a bad person, because there's still some laws and things like this, whereas actually the person operating on the private entity has a whole fucking lot of discretion. Let's be honest. As anyone that would have,
right? Like completely different.
Exactly. It's a lot of discretionary kind of like thinking, and like, someone who's written some compliance, plan. Yeah, okay. Who has looked into it? Only the other counterparty that actually received the compliance plan. Nobody else. That compliance plan is actually nowhere to be found on chain. You will never know. At least with the government entity, you will know that there will be some codification. There is a Reserve Bank Act or whatever that actually codifies what it is that whatever bureaucrat actually can do and cannot do. And then, of course, we will give some powers to some ministers and stuff like that. There will be some discretion, but there will be some codification. The compliance plan, no. It's like, so, and those things are merging anyways. When you have like the stablecoins being some of the biggest lenders into the US, and then it will be the same thing actually in the other jurisdictions eventually. The market is already quite hybrid, and I think it will become even more hybrid. I think some of the stablecoin mechanics now that's coming, the forces that are coming, is we're going to see much more of models that are similar to Circle, but where actually the wrapper of that model is not going to be BNY Mellon in New York. It's going to be a wrapper on chain. And that's where I think that's the power of it. I'm really passionate about that.
It's going back to censorship-resistant money.
Yeah, eventually we'll get that.
Yeah, I agree.
So if the entire financial system is moving on chain, and like you say, it's very obvious that that's where it's going, are CBDCs inevitable then? Because fiat money becomes irrelevant. So
that's actually a chapter of the book that is not written yet. And I couldn't necessarily put a crystal ball on that one. Will eventually people become like say, you know what? We'll not no longer give kind of like, I guess, full power to the government.
Mm.
And I'm talking here maybe kind of like 50-year horizons, 50, 100 years. I'm not talking at this point in my answer. I'm not talking about 1 to 5 years.
Yeah.
Like, will at some point people say like, you know what, if we created all of these wrappers and we have, for example, let's say Bitcoin or whatever the asset that is already actually so big, so adopted, and has already decreased massively in volatility, what if we just wrap all of that actually, and that becomes actually the stable?
I'm going to make a wild prediction that if CBDCs are in fact inevitable, they're definitely not going to be fixed supply, right? Like, there's no way.
Oh yeah.
No.
It'll be fractional reserve banking on chain.
Yeah. So a Bitcoin wrapper, I think Bitcoin will be a great benchmark. I think government treasuries of Bitcoin will have enormous implications for a country's overall economic stability and economic power in the future. I think governments that buy into Bitcoin treasuries now rather than later, like, you get the Bitcoin price you deserve. So there's an arbitrage now, I think, for smaller nations to build a Bitcoin reserve before they're priced out of that. And that will be a long-term, quite a smart play. And I think there's been examples of that already, right? With some of the South American countries that are already kind of thinking along those lines, deploying crypto as the base currencies on their, in their infrastructure.
I like this.
Yeah, the basement is a real thing. I think the basement is a real thing that people kind of like get a little bit scared about, especially when there's fiscal responsibility.
Yeah.
So I think kind of like bringing things a little bit more like to the shorter term, and now talking less as an entrepreneur and more like as a citizen, I would say. I would love really to see the transparency and the principles of transparency that you're seeing, that you see in DeFi and in other places, actually come to the government.
Yeah.
I think as a citizen, I would like to see at some point voting budgets.
Everything should be on chain. Everything.
And not only we're voting budgets on chain, the discretionary spending and all of the different parts of spending actually come on chain. The decisions that actually are being made around that, because they are already actually being made around those decisions around budget, which actually have direct implications on that shortfall deficit that actually creates the bond market. Those things actually become on chain. As a citizen, I think this is the thing that is the least possible outcome to happen in the short term, because none of those guys actually want that level of transparency from their citizens. But this is the thing that is the most needed to bring back kind of transparency and trust back to democracy.
It could save democracy. I mean, we're probably now trying to wrap this thing up, and then now getting into how blockchain will save democracy. But it's true. I mean, if you look at what's going on in the US, democracy is under threat from the very experimental kind of epicenter of the democracy experiment. And I think, corruption is now so widespread, even in small countries like New Zealand. Corruption is a really, really fucking real thing, and it's a big deal. And if we put every dollar on chain and that citizens demanded it, I think that in its own right, I mean, no one's going to police it. Who's really going to go diving deep in? I mean, some, train spotters will get in there, but for the most part, just having that transparency and having that accountability, and it's all there and visible and on chain, I think ends an enormous amount of governmental corruption, of mismanagement of funds, of, it shines a light on where all these secret little funds are getting fucking funneled here, there, and everywhere that we, the taxpayers, are paying for. And it's very simple.
100%.
The infrastructure is already in place. It's already there. We can already do this stuff. It's not like we have to invent this. It's already available right now.
Financial journalism and political journalism actually spends literally all its day long trying to find out what's going on. And we are all citizens. This is not abstract things. Every single time, like here, here, actually in our talk, you guys are probably paying some subscription solution through which actually the GST tax is deducted. That is going into that budget. right? So every single action almost that we do in our daily lives is actually collecting some type of tax. We don't want to actually have the, I guess the seats, like this, like we have not only the right, actually almost like have an obligation, because the only thing that is public is all of us, right? So actually the fact that actually all of that money, would you actually go and kind of like manage your own kind of like household budget in the same ways that actually we see governments actually being managed? Like you have a lot of wife all the time about what is it that we're spending on this, we're spending on that. We know where we stand. When it comes actually to the citizenry, we are all sitting kind of like putting money, all of it, into this sinking holes, and we have no idea what actually are the outcomes actually on the other side.
Well, it reminds me of that project you and I were working on about potentially building DAO infrastructure within government institutions. Right. I think it reminds me of if you follow the Philippines, where my parents are from, they've actually just got an MOU signed between Bayani Chain and Baguio City, which is like a small town. And the goal is to move all of the council members' decisions on chain, kind of like as a DAO. And then that means all of the decisions are transparent. There's a massive trust and corruption problem in the Philippines. And so I think this is a massive use case for blockchain, right?
Absolutely. I think I agree. I think it's one of the most important problems to solve. But I think personally, and this is just like, I guess, the cynical person in me, I think this is one of the least to be prioritized from a government perspective.
Of course, there's no incentives. We need a fresh person to come in and say, "Fuck it, this is my platform. I'm putting everything on chain. Vote for me, and you'll see everything." And
you will require someone very bold.
It's going to take to build the infrastructure out, but it makes complete and utter sense. And I think, Brian, we'll all watch with great interest this small experiment in the Philippines and the impact that it has. Could be a great little poster child for the power of the immutable ledger.
That will require like a big, like a statesman, like really someone that actually thinks, not in a political cycle of 5 years. It will require someone that actually thinks in terms of like in 50 years time. And I really actually want this social experiment, really, that is democracy, to succeed. And I'll stake myself in that. So actually I gain back the trust of the citizenry. So actually my citizens really think actually there is a value in democracy.
That's quite funny. That's quite funny because in the Philippines, politics is a family business. And you're right.
In every country, politics is a family business.
Yeah, like, you're a politician now, and then in 50 years, your grandkid is sitting on your seat.
Yeah.
Absolutely, it is. And I have kids of my own, and I mean, to be honest, I mean, democracy is not perfect, but I've worked with people from China and from other places. I wouldn't like my kids actually to grow that there. Right, so it's like, so it is not perfect, but there's much worse. So I'd rather be in the system that is not perfect, where they have like like a say, rather than in a place where they will have no say, and unless actually they were born in the right cradle, they were fucked. So it's like, like if you're not born in like the right family, then you have no social mobility. So that's why kind of like I really want to see this social experiment that is actually democracy and like succeed. And there will be so many different, I guess we've digressed a little bit, but there's a lot of aspects of it actually that relate to
digital identity, with you, financial sovereignty, the immutable ledger. These are all fundamental layers that can solve a lot of problems in not only financial systems but government systems and ideological systems. I've got to bring this to a close because I'd literally have to go.
Yes.
But what I want, Will, can you tell everybody where they can follow you, so that when you run for the Prime Minister, they know how to get and vote for you on
There's just too much things to be built for me actually to spend my time in politics. I mostly kind of gotten interested in this space mostly because of like since I had children. I just want to see actually a good
future.
I want to actually be able to enjoy my grandchildren more than actually my children. Children, you are hard with them actually, so actually you can actually be easy with them actually when they are adults, and actually easy with their kids. Right? So it's like, but yeah, no, people can find me, reach out to me, connect with me on LinkedIn. Try to present yourself, kind of like be a little bit respectful in terms of like, hey, Will, would like actually to have a chat or whatever. There's a lot of like AI stuff and imposter stuff. So I tend to reject when people just say like connect and I never met you, because nowadays world is becoming a bit weird on that stuff. But if you just say, hey, we would like to actually to talk to you, etc., then I'm more than happy. And then yeah, LinkedIn is an easy way. I'm also active on X, where all of the crypto craziness actually goes anyways, and some of like the sarcastic communities when it's more about geeking out about like financial services and stuff. And yeah, so it's mostly that. So, and yeah, keep an eye out for some of the in stealth stuff.
Yeah, you have to follow Will to follow to get the skivvy on the in stealth stuff, but it's coming soon, loud and proud, and I'm very excited to be a part of that. So
yeah, we are working hard. It's back to 15-hour days again. So so yeah, just this last couple of days actually. I had like out of the last 4 nights, 3 nights I went to sleep at like 4 a.m. and at 8 a.m. I was actually up actually getting breakfast for the kids. So it's like it's at that level of
fun,
of progression. So it's actually pretty exciting.
Yeah,
pretty exciting.
Hashtag startup life. Brian, any final closing thoughts from you, mate?
I think we'll need a round 2. I was looking through our run of show, and definitely there's a lot more alpha to be shared. And I think, this is a great, DeFi. This is a pure DeFi conversation. A lot of our conversations have been about policy, have been about CeFi, a bit of TradeFi, but this is a great deep dive into DeFi from someone who was deep into TradeFi, working at a bank. And so definitely, I've really enjoyed this. And yeah, I think for those of you who aren't a member of Blockchain New Zealand yet, come join us, because we're doing some really important work for the next several months. We've got Crypto Winter 2.0 this time next year. And Trevor, what are your thoughts, mate?
My closing thoughts. Thank you very much, Will, for giving up your time, mate. It's always such a pleasure to catch up with you, and just there's no rabbit hole that we will leave unchecked as we go through this. The next podcast will be all about blockchain, and the Solana Foundation saves democracy globally, and we can get right into that. Keep an eye on blockchain.org.nz and on our LinkedIn's and socials, so that you can stay abreast. We will be bringing TradFi and DeFi conversations, and maybe Will here will be a part of those conversations very soon. And we're gearing up for all the announcements around Crypto Winter 26. So yeah, kicking along very nicely. Thanks, everybody. Thank you, Will. Thank you, Brian. And don't forget, you get the Bitcoin price you deserve.